Hello and welcome. I'm Andrew Howard, Chief Investment Officer here at Catholic Super, and I'd like to welcome you to this investment update for the year ending 31 December 2024. Despite starting 2024 with the broadly held consensus that the US was going to enter a recession, plus a strong year in equity markets in 2023, there were expectations that positive returns would be harder to come by in the year ahead. However, what transpired was another year of exceptional performance in equity markets. In fact, the US S&P 500 index recorded 47 new record highs over the course of 2024. The US economy continued to confound economists by remaining in sound shape, despite the US Federal Reserve having pushed interest rates to a more than two-decade high. Corporate profits continued to meet and beat market expectations. And of course, we saw no end to the enthusiasm in all things AI, with investor sentiment continuing to reach fever pitch levels. We also had the anticipated build-up to the US election, which was held in November. And despite concerns around what the implications might be in the event that it was a closely run race, these worries very quickly dissipated, with investors buoyed by Trump's resounding win, with the expectation that his policies would be good for equity markets. The result of the continuation of the bull market is that we saw another year of exceptional returns delivered to our members, highlighted by our MySuper option, which returned 11.16% for the year. And with equity markets being the dominant driver of returns, this benefited our higher growth options, with our Growth Plus option returning 14.77% for the year. These strong returns were also delivered to our members invested in our retirement product, with the Balanced Growth option returning 12.1% for the year and the Growth Plus option delivering a return of 15.78%. So with 2024 now in the rearview mirror, what can the market expect for 2025? Generally, with recession risks firmly in the back seat, US economic growth is expected to remain reasonably strong. The market expects corporate earnings to remain robust, with the potential to broaden beyond last year's beneficiaries. Inflation is expected to remain a little sticky, but not so much as to derail one or two more rate cuts by the Federal Reserve. The environment feels like a Goldilocks outcome, and this is reflected in today's market prices. Share market valuations, by most measures, are high and reflect a noteworthy level of optimism. So what could bring this investor euphoria to an end? A lot will centre around how Trump executes on his policy agenda, particularly with regard to tariffs and trade. Investors will continue to watch inflation numbers closely, and any perceived risks around the likelihood of the ability of the US Federal Reserve to execute on further rate cuts could see equity markets pull back sharply. The potential range of outcomes in the year ahead is wide. But what we do believe will be a central element of markets in 2025 is increased volatility. Market valuations are arguably priced for perfection, and so any risk or threat to investors' optimistic expectations will likely cause investors to run for the exits. Our focus remains on building an investment portfolio that can contend with any market environment and deliver a consistent pattern of returns over the long term. So while we are pleased to be able to report another year of positive returns for our members, we want to ensure that the portfolio is well placed to contend with a market environment that is not as rosy as the one investors have enjoyed for the past 2 years. If you'd like to find out more information, please head to our website. Thank you for watching.